What is up, crypto bros? We finally have the pivotal event we've all been waiting for happening in 3 days on September 18th. That's going to change the landscape of crypto, right? We've all been waiting for half a year for this thing to get going, and now the ship will finally start sailing again. The event I'm talking about is rate cuts. I wanted to explain what rate cuts are, what this means, and why it's so good for crypto, and why crypto might pump for the next 6 to 12 months. And of course, none of this is financial advice. This is just for education. Okay, so without further ado, let's jump right in. Basically, every developed country at this point has what's called a central bank. In America, it's called the Federal Reserve, but basically every other developed country has one. What the central bank does is it manipulates what's called the prime rate, or what everyone calls interest rates. And what this interest rate is what banks pay when taking out a loan from the Federal Reserve. You get loans from your bank. You get loans for your mortgage, you get loans for your car, maybe for school, and you should be wondering, well, where does the bank get money? And the bank gets money from the Federal Reserve. The Federal Reserve charges banks an interest rate to take a loan out. So when the Federal Reserve is charging banks a high interest rate, banks have to charge you a high interest rate so that way they're able to pay for the Federal Reserve. So in other words, when interest rates are high, you're paying a lot more money on your loans. When rates are low, you're paying a lot less money and you have a lot more discretionary spending money. Here's the thing to know. When interest rates are high, assets generally do poorly. When interest rates are low and there's a lot of liquidity or money in the economy, assets do really, really well. People have extra money and they're more willing to put that into risk on assets like crypto. Another reason why this is so important is that if the Federal Reserve is lowering interest rates, that means they're trying to stimulate the economy. When interest rates are coming down, the Federal Reserve also prints money. The Federal Reserve cuts rates and prints money in response to a weak economy in an attempt to artificially stimulate it. So what's happening September 18th is that the Federal Reserve is going to start cutting rates and it's going to start printing more money, injecting money into the economy. So unfortunately, what we want to see is a weak economy because it's going to tell us that, okay, rate cuts are coming, the printer is going to turn back on and start printing lots of money, stimulating the economy, and assets and crypto is going to do really, really well. So here's what happened. In late 2023, the Federal Reserve was talking about, we're going to cut rates like crazy. We're going to have 7 consecutive rate cuts. We're going to print a lot of money. We're going to stimulate the economy like crazy. And 2024 is going to be awesome. And so what happened is we saw early 2024, and I know you guys all remember, crypto went wild. You guys totally remember that. Bitcoin jumped from 40K to 70K. A bunch of other cryptocurrencies skyrocketed. However, the Fed suddenly pivoted. Initially, they were very dovish, saying things like, we're going to cut rates and print money. But then they pivoted to being quite bearish and saying, wow, there's really stubborn inflation rates, which is what I've pulled up here. We can't get inflation down, which means we can't actually cut rates, and we have to keep delaying rate cuts. Look at this. In January, February, and March, inflation actually went back up, which is why the Fed suddenly pivoted and said, we can't cut rates. We have to start delaying it. So what happened is in the very beginning of 2024, everyone was expecting 2024 to be a year of rate cuts and tons of liquidity, but instead, the Fed paused it right after March. And so the Fed started delaying rate cuts. And as you know, crypto hasn't really moved. And in fact, many coins, especially altcoins, have really dropped down. Everyone thought 2024 would be great for crypto because of low interest rates and lots of quantitative easing or money printing. But that got delayed for 6 months, which is why we've been in this weird, awkward chop period. So we're waiting for signs that the economy is bad and that inflation's coming down and that the Fed needs to cut rates. So I've got a few things here that I wanted to quickly touch on just to show you, to prove that, yes, that our economy is doing quite badly and the Federal Reserve has to cut rates. U.S. job opening data has been revised downward in 15 of the last 19 months, the longest streak since 2008. Basically, really quickly, how that works is that we get a jobs report, and then it says, this is how the jobs did the last month or the last 2 months. And that later gets looked at again and revised based on new incoming data. And unfortunately, 15 of the last 19 months, all revisions were downward. So the jobs report came out, said, we created jobs. And then after the revision, it comes down a lot. And it turns out that, we actually did not create all those jobs. The number of job vacancies has been regularly revised down over the last 18 months, with the largest adjustments reaching over 500,000. The most recent release for June was lowered by a massive 274,000 openings from the initially reported 8.18 million, the fourth largest revision since 2020. Meanwhile, job openings for July came at 7.67 million, the lowest since January 2021. You might be wondering, why are these initial reports so off? Why are these revisions so greatly to the downside? And there's probably political reasons to that. Especially during an election year, it's very flashy and it's very good to be able to say, hey, look at all the jobs I created. Look at the job reports. This is under my economy. And then after the revision, kind of just not mention it. So politics definitely plays a part in that. And also just regular difficulty, because it's not easy to know exactly how many jobs you're creating and losing. So some of that is like it's natural revisions. U.S. consumers' savings are completely gone. U.S. net savings as percent of gross national income fell to negative 0.9% in quarter 2 of 2024, the lowest level since the Great Financial Crisis. Savings have been negative for the last 6 quarters, the second longest streak in the last 70 years. This, of course, signals that the economy is in bad condition. And 37% of small U.S. businesses have seen their earnings drop over the last 3 months, the highest share in 14 years. This is even weaker than the 35% seen during the 2020 pandemic. Over the last 3 years, small business earnings have declined in a near straight line lower. Increased labor and material costs and deteriorating sales volumes have been the primary drivers of this. Recently, small business sales expectations fell to their second lowest level in 4 years. Small businesses are struggling as if the economy is in a recession. And honestly, if you're being truthful with yourself, we all already know this. You know that groceries are very expensive. You know that loans right now are very expensive and interest rates are very high. You know that the economy has not been doing well because you can feel it. So not only is the economy in a bad state, but we finally got inflation down. It was very stubborn in the beginning here, but we're finally getting it down under the 3% and to the target 2% rate. So now what has to happen? The Fed has to come save the economy. The economy is in a bad state and inflation is low, so we're risking entering a recession if the Fed doesn't come do something. Now get this, we can come over to the CME Group FedWatch tool, which gives the estimates for rate cuts. We have a 100% chance of easing, which is a rate cut September 18th, 3 days from now. There's a 50% chance interest rates are cut by 25 basis points and 50% chance they're cut by 50 basis points. Just so you know, 50 basis points is 0.5%. Right now, the prime interest rate is 5.25 to 5.5%, but after September 18th, it's going to get dropped to one of these two. And on top of that, the Fed doesn't just cut rates once. The Federal Reserve cuts rates a little bit at a time for many consecutive months in a row. And as we can see here, the Fed is going to be cutting for almost a year. And guys, there is a 100% chance of this. I know it's dangerous to speak in absolutes, but I mean, according to the FedWatch tool, it is 100%. So much of the euphoria we felt in very early 2024 is going to return, and this uptrend is going to resume. In other words, this little downtrend and choppy phase isn't going to last forever. The best time to pick up coins during a long-term uptrend is during a short-term downtrend, which is where we are right now. Essentially, everything we were expecting for 2024 was pushed back to 2025. So this is the time to be in the market. This image is the global liquidity cycle. This tracks the amount of money we have in the world. Look at this. The amount of circulating money moves in waves. It goes up and then down and then up and then down. And right now, if you take a look at where we are, we're at the very, very bottom. Do you see this black line down here? So what's going to happen for the next 12 months is that we're going to have this black line go all the way up here. The amount of money, liquidity in the economy is going to be increasing because of money printing and low interest rates for the next 12 months, which means assets will do really well. And yes, this is the global liquidity cycle, not just the American liquidity cycle, because many central banks across many different countries tend to increase rates and decrease rates at similar times. And just to give an example, the Bank of Canada just cut rates by 25 basis points and are claiming that there could be even bigger cuts. Given that Bitcoin and crypto is a global asset, all of these countries are going to be increasing in liquidity, which means that these markets should do really, really well. I pulled up a chart that I think highlights the correlation of money supply and price of crypto very well. This black line is the price of Bitcoin. The blue line is the supply of money, and the green waves in back here is the year-over-year percent money growth. So these green periods back here are when the Federal Reserve is printing money. And just look for yourself. Look at the correlation of the black line with the other lines. Right here, when it started, everything started ticking up. We see the Federal Reserve printing money by the green, and we can see the actual money supply increasing. The price of Bitcoin also increases. Same thing, look at this. The green line starts decreasing, rather the green waves in the back start decreasing. And so does the price of Bitcoin. Right here, this little green wave that we got in early 2024, look at how small it is compared to these previous ones. That's because we only got a little bit of printing before we got an immediate delay. But now we're going to get a full year of this, guys. So just like Bitcoin did really, really well in 2017, just like Bitcoin did really, really well in 2021, we should see the exact same thing, Bitcoin and crypto do really, really well in 2025. So just to summarize it, on September 18th is the very first of many rate cuts that's going to be happening for the next 12 months. We're going to get low interest rates finally, and we're going to get a lot more quantitative easing or money printing, which altogether just means the government is going to come inject money artificially into the economy to prevent a recession. Because there's a lot more money in circulation, it will find its way into assets, and assets will do really, really well. We thought this would happen all of 2024, but the Fed suddenly pivoted and they became bearish. But finally, they have to step in because the economy is not doing well, and we're going to get that continuation up again. So I believe it's a good time to get into the market. I don't think we're going to be able to buy coins for this cheap for much longer. I do want to be clear. I do not think September 18th, suddenly Bitcoin goes to 100K or anything. I wouldn't even be surprised if September 18th, we get rate cuts, Bitcoin pumps a little bit, and then basically crashes because we have a sell the news event. I would not be surprised if we see another flush, just because that's how markets are. It's a really easy sell the news event. So if you're planning to buy more crypto, maybe wait a little bit after the first rate cut, wait for this maybe initial correction that might happen. I definitely do think it'll take a couple months before anything crazy happens. Also, there's an election happening, and we've got one candidate that's definitely pro-crypto, one candidate that's not so sure. So the price of Bitcoin's kind of up in the air right now. We'll have a lot more clarity after the election. So we might see a little bit more chop until the election, but nonetheless, it doesn't matter. We know the next 12 months are going to be good. We know the price of Bitcoin 12 months from now will be much higher than it is now, today, so it's a good time to buy. Guys, if you're not in the Discord, make sure to join that link in the description. We have awesome tools such as the AI trading assistant, which is just exceptional. I do one-on-one calls on my website at thecryptonerd.net. Definitely sign up for that. And also, I have a deal with Gemini to give you a free $10 as a sign-on bonus if you create an account using my link in the description below and make a trade of $100 or more. It'll be deposited right into your account. Do that. It takes 10 minutes. You get $10. Why not? Now that you're ready to get back into the market, you're probably wondering, what cryptocurrencies do I buy? Well, I conveniently made a video talking about a great crypto portfolio for 2025, which I will link right here. Make sure to click that. Subscribe, guys, subscribe.